Hello, 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 and welcome to another episode of Freedom Ain't Free. My name is Joel Huey. I'm the principal at ARC Financial Strategies, and in today's episode, we're going to be talking about how to save for retirement while paying off your student loans. Great topic. Lots of ideas and strategies are coming your way, and make sure you stay to the end because we've got an amazing offer for you coming to help you solve all of these types of financial challenges and or problems. We also want to let you know if you're looking for a personal advisor, there's a link down in the description where you can reach out to us for a free consultation, get yourself your freedom number, and let us talk about helping you get financially free. So let's jump into today's topic as I began to think about strategies and ways to be able to build out your freedom portfolio. And here at the Freedom Ain't Free channel and at ARC Financial Strategies, we like to help our clients to develop portfolios of $2 million, right? Freedom, we like to say, comes from income. And so if I've got $2 million and I can get an 8% return on my money, I've got $160,000 a year coming from my investments, coming from my assets, and no longer coming from my labor. But one of the things that may be slowing you down from being able to save enough to get to that level is your student loan payments. So here are three different strategies, depending on who you are, that you may be able to use all three. You may be only able to use two. But here are three strategies we want to share with you today to help you to slide around that particular bill that you have going on in your life. And then, be able to utilize some wisdom, knowledge, and understanding of all the financial tools to get you to your financial freedom goal. So I want to start off with the part or the idea or the strategy that is probably on the first foremost of your mind is, how do I not have to pay him at all? Well, there's lots of different terminologies and things that fall into that place. There's forgiveness, there's discharge, there's, cancellation, but they all basically mean the same thing, right? The government's going to excuse you from this debt. As of this recording, I have discovered there are only a few people who fall into the category of having this option available to them. And so if you don't fall into this, then you're going to have to kind of watch the video a little closer and pay a little closer attention to the other two. So first and foremost, if you are completely disabled, specifically if you're collecting Social Security disability, you're able to qualify for forgiveness, discharge, or cancellation. If you are a school teacher, and you've dedicated your life to educating students, you qualify for forgiveness, discharge, and debt cancellation. If you are a regular government employee, federal government employee, you qualify for forgiveness, discharge, and cancellation. If you work for a nonprofit, you would qualify for forgiveness, discharge, cancellation. And if you are a nurse, a doctor, or a in the medical profession, you will qualify for forgiveness, discharge, or cancellation. And so you want to visit the website specifically centered around student loans. And then there's paperwork in process, and it's different for every industry, right? So you want to work through your industry, you want to work through the path work and the coursework, and you don't want to give up. Let me say that again. Your strategy is to not give up, right? Jump through all of the hoops that are required and necessary. Now, in the meantime, while your student loan is going through this process, you want to see if you also qualify to have your loans put on pause, right? And I'm using that terminology specifically, right? There are some official terminologies, but it depends on which category you fall in. So to help you basically understand, right, put on pause, that means you still owe the money. You just don't have to make a payment right now, right? So I want to say put on pause. And what I want you to do with the payment that you would have been utilizing is I want you to put it into another strategy that I'm going to talk about in just a few minutes, right? So don't spend the money. Let's reallocate the money to a different strategy and or tactic while your loan is on pause. So first and foremost, research forgiveness, discharge, and cancellation. Secondly, put your loan on pause while it's being reviewed for forgiveness, discharge, and cancellation. And let's reallocate those dollars to a better strategy or tactic until we get that glorified notification that our loans have been forgiven, discharged, or canceled. Next, if you're 100% disabled, remember, you qualify for forgiveness, discharge, and cancellation. So you want to make sure first step is to get that 100% disability through Social Security. Secondly, then you want to go and apply for forgiveness, discharge, or cancellation, and then your debt will be wiped out altogether. The second strategy I want to talk to you about is if you don't fall into any of those categories, then what you want to do is you want to play the refi game, right? Refinancing your student loans. So whether you got a federal student loan or you have a plus loan, which basically means a private loan, you owe an individual bank, not through the banks that are working through the federal government's program. You want to play the refi game, right? And I looked it up. Today I seen rates as low as 2.84%. Now, you got to have great credit to get the 2.84%, but whatever the rate is, if you can save a half a point, a quarter a point less in interest, you want to play the refi game. In addition to that, playing the refi game will usually get you no less than 30 days, but sometimes you can actually get and negotiate another little window. Maybe you can get a 90-day window. Maybe you can get a 6-month window. Maybe you can get a pause for a year, right, through that refinancing program. So if every few years, as rates begin to decrease, you play the refi game, then you want to take the payment you were spending, right, and we want to reallocate it to the third strategy, right? Reallocate it to the third strategy. So play the refi game. Go to the various different banks and see who has the best rates, who has the best terms, who's going to give you the longest window of time for a pause, and then refinance your loan. Now, you got to make sure that you're looking at the cost, because you don't want to keep increasing your balance by paying exorbitant fees. So make sure you're paying attention to the cost. But a lot of times you can do your student loan refi at little to no additional cost, right? So if you can take that $500 a month payment and pause it for a year, we've got $6,000 that we can put into our third strategy, and then we can utilize that to help us with our student loan game. Your student loan game is what I like to refer to as the long game, right? I want you to think of it as, I'm going to keep this thing on the books as long as I possibly can, and I want to take the dollars that I would have been putting there, and I want to use them in a different strategy, and then I'm going to focus my attention on paying off the loans on the back end, right? So first strategy is forgiveness, discharge, and cancellation. Second strategy is the refi game, right? Whoever I can get a better rate from, who can give me a little bit of a reprieve or a little bit of pause, I'm going to play the refi game. The third strategy is the delay and invest strategy. Delay and invest strategy. So if my student loan interest rate is 2.8434%, but I can actually take that money and put it into a fixed account that's getting me 5 or 6%. Or I can put that into an index annuity strategy where I'm not taking on any principal risk, but I can get up to a 10 or 11 or even a 12.5 cap rate strategy. Or I can get an uncapped rate and get 110, 115, 120% of what the market produces. I'm better off delaying that student loan strategy, paying that back, taking that money, putting it into the market, and now I've got an asset growing that is growing at a higher rate than the rate of the loan that I'm paying off. So, as an example, if my student loan payments are $6,000 a year, and I've got $100,000 that I built into my investment account, and I can get a 6% rate of return on that $100,000 every single solitary year guaranteed, and yes, you can do that over a 20-year period of time, then I can use the $6,000 from my asset to pay my student loan payments. That then frees up me to be able to take the money that was going into my student loan bill into another vehicle that I can then focus back in on retirement. You've got to learn how to let your assets create more income for you and not continue to try to squeeze out every dollar from your income. Build assets. Use the income from the assets to take care of your debts. Eliminate your debts through asset accumulation, not through income accumulation. And then ultimately, when the debt is gone, I can take all of the money that I was pouring into my debt and pour that back into my accumulation vehicles. And now I'm making up the time that I had to spend getting myself out of debt because I have more money to invest in my long-term retirement strategy. We want you to get to that $2 million portfolio as quickly as you can. You've now bought yourself financial freedom. Now, you might still have to work a few years after you've done that to get rid of your debt, but you're better off utilizing the delay and invest strategy in your student loan strategy, going after higher rates of return, taking the interest spread difference and paying the student loan, and now I have my money working for me and my money growing, right? If you have a 401k, and you're able to withdraw some gains from your 401k, I can utilize the gains from my 401k to take care of my student loan bill, and then I can put that money back into my 401k for the higher gains, right? So that's your delay and invest strategy. You also want to look at utilizing a Roth IRA strategy. Remember, a Roth IRA is an umbrella. Underneath that, you want to use a direct indexing strategy where you can focus in on the better companies that are getting better rates of return, giving you a bigger spread in the short run to be able to take care of that student loan payment and still grow your money for retirement completely tax-free at the same time. So this strategy is forgiveness, discharge, cancellation. Second piece of the puzzle is the refi game. Third piece of the puzzle, delay and invest. And if you can put all three of these strategies together to work for you while you're waiting for them to forgive you, you're putting your payments on pause, you're putting the money that you would have put into that strategy into your invest strategy, utilizing either your 401k where I'm going and being a little more aggressive, taking the spread, or opening up a Roth IRA, using a direct indexing strategy where I'm focusing in on companies that are performing the best, and then taking the gains and going out and paying off my student loan debt in a total lump sum once I've gotten to the end. And now I'm ready to take those dollars that I was spending over there, put them back into my retirement strategy, and put myself in a position to build my $2 million arc as quickly as I possibly can. This is a great strategy and a great idea in a way to use the same dollar and get it to do multiple things. If you want some more information, if you want some one-on-one coaching, we encourage you to click on the link, grab you a free consultation. We'll give you what we like to call here at ARC Financial Strategies and their Freedom Ain't Free channel, what we like to call is your freedom number, right? If you're out there working hard, you're pouring into career, you got your career, you're focused in on your career, and you're focused in on earning as much income as possibly can, and you're looking for some financial help, you're looking for an advisor who's going to be able to help you with these strategies and help you show you how to maneuver your money around to get where you want to go and get to financial freedom. We want to encourage you to schedule an appointment with us today. If you want to do it yourself, we've created a new opportunity for you. You want to do it yourself, you got the basic wisdom, knowledge, and understanding, and you just need the details, right? We're excited today to be able to launch the Financial Freedom Institute within our school community, right? The Financial Freedom Institute, where I'm going to provide you with the wisdom, knowledge, and understanding of all the financial strategies and tactics and tools that are available in the current economy to get you financially free. This is a deep dive class, deep dive program for you. They are on-demand videos that you can watch over and over and over again. Best part about it is you're going to get access to the Financial Freedom Institute for just $297 for the whole year, packed with information and wisdom, knowledge, and understanding for you. So make sure you click on the link. Join us in the school community. We're going to be sharing ideas and strategies there. We got on-demand videos for you. We're going to give you the in-depth details of how to accomplish this strategy we just talked about today, and that's going to help you get to your financial freedom. We appreciate you carving out some time today, and we want to remind you that freedom ain't free. See you in our next episode.